We completed over 32,000 maintenance requests in the last 3 years, and here's some information on that. Hi, I'm Mark Gainley, partner, founder, GC Realty and Development, also co-host of Chicago's #1 real estate investment podcast, Straight Up Chicago Investor. And what we're going to talk about here today is maintenance. So we went back 3 years and we pulled all of the data around our tenants' maintenance requests, and just it was common area cleaning, it was routine maintenance, it was on-demand requests, it was emergencies, and we put an awesome article together. I'll put a link here below to the article, but in today's video I was going to talk about. So we did 32,596 work orders in 3 years, or call it 1,095 days. So that's about an average of 30 per day. Now to be fair here, our portfolio is about half in Chicago, half in the suburbs. And I'll tell you this: Chicago is, in general, across the whole portfolio, whether it be city or suburbs, weather just beats the hell out of our properties, whether it be our driveways, our yards, our buildings, our roofs, our eaves, our awnings. The cold forces animals to break in to be able to find warmth inside your house, like everything. So the weather is definitely a huge factor here in the Chicago market for any real estate investors. And I think a lot of people underestimate that. And then you have the age of the buildings. Now, not all buildings are as old as some of these ones are 1880. So think about that, 840 years old. We have a lot of our population. I did a report recently, and I believe it was 60% of our housing stock was built before 1978. So 1978 is still almost 50 years old at this point, where you have a lot of the Sun Belt cities that, one, don't deal with the weather, but two, everything was built in the last 20 years. So no matter what, here in Chicago, if you're a real estate investor, if you're a property manager, you just have it tougher because of those two factors. But doing these 30 per day, we figured out, and in the article I put all the zip codes, which ones had the most. I believe, if I remember correctly, it was 60617, which is a pocket on the south side of Chicago where we had the highest. It wasn't based on how many units, it was the highest per unit average or whatever, and 60617 was our highest. And then we had a couple of suburbs and a couple of northwest side zip codes that shocked me as well too, and you can read all about that. But one of the bigger takeaways I took from looking at this was, I look at my own performers, or I look at performers, I think about performers that I talk to other investors that are buying. They really don't account for some of the bigger things that ended up being larger line items on our maintenance kind of list here. And one of those is heavier turnovers. Not every turnover is created equal. And if you buy a property that is, just an average condition, and you upgrade it over the next 4 turnovers, that means your turnover is going to be 20-25% higher than maybe something that you're buying that's new construction, or something that's got rehabbed, that you just kind of have to clean, do some punch list items, change locks, and so forth. So the turnover is totally underestimated based on scope, how long it takes to do it, and really overall costs. And we're filming this here in 2026. Since COVID, costs across maintenance, especially plumbing, has gone up considerably. And with all that said, I don't think the way that us as real estate investors in the Chicago market underwrite our numbers has not completely caught up either. So the other thing, not just turnovers, but CHA. So Section 8 has become a lot more prevalent with moving tenants to the mobility program, or the different programs they have that spread CHA out throughout the city. In the suburbs, it's a lot more popular. And there ends up being this other hoop you have to jump through on an annual basis, which is the inspection. Yes, you can charge some of it if there's damages or paint touch-ups back to the tenant, but in the meantime, you have to send your guy out there. He has to assess it. He has to meet the inspector. He has to, fix anything that needs to be fixed. He has to, if you fail, you have to fix anything, and then you have to go back and meet the inspector again. But all those end up being additional layers of your maintenance kind of outline on your pro forma, or your budget. So that's another thing I think people are not necessarily accounting for. And then appliances. I think we're in this age right now where appliances are not lasting as long, and it's costing a little more to repair them. So it's really hard to take a $600 stove and go send someone out to repair it, and it costs $300. It's like, man, for half that price, you might as well just got a new one, and maybe you at least get the warranty, and it probably lasts 3-4 years before you got to send someone out there. So you start running in, we've been seeing more and more, you run into this decision you have to make at year 4, 5, 6 of like, is it just easier to replace it? Think about a microwave or a dishwasher, and those are probably the cheaper appliances a microwave you can get installed brand new for $400. Like, it doesn't even make sense if it doesn't work. And usually they'll stop working about 5 to 10 years is kind of their span. But even if you're 5, you're like, I just got it 5 years ago. To even most short of maybe a handle on a microwave, it's hard to even repair something that's relatively inexpensive versus just considering replacing the whole appliance. So, but yeah, those are the 3 things that when we were looking through the data and comparing it to what we actually kind of compared it to what our clients, we manage for over 600 Chicagoland investors, what they're talking about the most, what they're saying their numbers are off on, what they might be even complaining that they're spending too much money on. Those are the 3 things. But doing 32,000 work orders in 3 years, there's a bunch more data. I'm going to share more information on this along with some of our other data. I think I'm kind of on this journey now of taking our data from previous years and sharing it with the Chicago real estate community, because we have a pretty good set of data that we can compare, and it's pretty accurate. So if you don't want to have to worry about maintenance work orders, if you don't want to have to worry about turnover, if you don't have to worry about your time or the risk or any of that, we can help you. So we are a full service property management company. We could help you for as little as just consultation up to just tenant placement, and then we do full service management. So like I said before, we manage for hundreds of real estate investors here in the Chicago market. And if we could ever help you lower your risk or buy your time back, we got you. Have a good one.